It is tax season. This is probably a $1 million question that they have been trying to find out for themselves. The question is, are there any specific deductions or, of course, credits available for seniors that could help maximize their tax savings when filing their tax returns? Well, welcome to today's episodes of course, Maria Cares, and it's about smart finance for seniors, where we delve into the critical topic of tax returns for the senior generation. Understanding the tax system can be challenging, especially for you as a senior citizen. That's why we are thrilled to have with us a seasoned enrolled agent, an expert in tax matters, and he will guide us through the intricacies of filing tax returns for seniors. Well, highlighting essential guidelines and discussing potential tax consequences. Whether you're a senior or a caregiver or someone looking to assist a loved one with their taxes, this episode is packed with valuable insights and tips. Well, in today's segment of Medicare Matters, we delve into the nuances of Medicare Advantage open enrollment period, including who's eligible and what changes you can make, and the tips for comparing plans to ensure that you are making the best decision for your health and financial well-being. Whether you're looking to switch plans due to changes in your healthcare needs, or you are simply curious about your options, this discussion will equip you with the information you need to navigate this important period confidently. Well, we believe love knows no age, and Valentine's Day is the perfect occasion to cherish relationships. Well, forge new bonds and simply enjoy the company of friends and family. So whether you are looking to treat yourself, spend time with a partner, or connect with friends and family, stay tuned as we guide you through some fantastic ways to celebrate love with Valentine's Day. And of course, let's make this day a day to remember. So, no matter what state you are from or what work you've done, you must transition to Medicare at a certain point in your life. Maria Cares has a mission to bring Medicare information right to your home. I'm your host, Maria Garcia, a licensed sales agent, always available to assist you with your Medicare and other senior concerns. We are broadcasting in the entertainment capital of the world, Las Vegas, a place you would like to be in, especially when you retire. Come on, let's join hands for a better health.
One word to describe the Humana Neighborhood Center is home.
It's a safe place where people can come, learn some things, be with people their age, feel welcomed, and not only that, but just being around people that are having fun.
I think members come to the center first and foremost to have fun. I wish I was a member. This place makes members feel that they're being listened to.
The Humana Neighborhood Center provides to the people who come here with a feeling of welcome, definitely provides a place where they can find other people who relate to them.
It's a continuous relationship that grows. As we grow, they grow.
One of the best approaches or the best things that we do is human care. Human care is looking at you not just for your condition, but you as a person, you as a family member, you as a friend. It's looking at a whole person and all of their needs, socially, physically, mentally.
They chose the right people for this center because they exude interest in you and getting you to be interested in yourself.
Without the people, without the greeting, without the love, without the kindness, it won't mean anything. It's just a building.
My favorite part of working at Humana is just making sure that I leave feeling like I changed someone's life.
Knowing that they walk away happy is my favorite part.
I work here because I wanted to help people, and I felt like this was the biggest impact I could make. This place feels like home.
It's home.
Feels like home.
It's home for me.
When I walk through the door, I feel like I'm at home. I'm okay. I made it. I'm here. Let's do it.
Humanicare is human care.
Please welcome our distinguished guest, William P. Farmer, Jr., a seasoned enrolled agent whose journey in tax preparation and representation spans over 3 decades. Bill, his nickname, embarked on his professional path after passing or acing the enrolled agent's examination in 1993, a time when the test was 2 days affair with nothing but the number two pencil and a scratch pad. Since then, the landscape has dramatically shifted to computer-based testing, mirroring the evolution Bill has witnessed in his career. Starting in 1988 with the National Tax Preparation Company, Bill quickly found his footing and ventured into his own practice just 2 years later. By 1994, he had established an office outside his home, marking the beginning of a remarkable growth and trajectory. His business flourished from handling fewer than 100 income tax returns per season, well, to managing over 1,300 individuals and businesses' returns before he sold his thriving business in Lexington, Kentucky in 2020. Well, following that sale, Bill and his wife relocate from Kentucky to Las Vegas. Thank you for being a local now, Bill. And a move that has lasted just over 6 weeks before Bill has drawn back into the workforce, driven by his dedication to his profession and his clients, of course. Well, throughout his career, Bill has represented both individual and business taxpayer in over 200 cases before the Internal Revenue Service. Well, his experience ranges from negotiating simple installment arrangements to navigating complex offer-in-compromise process that settled substantial tax liabilities. Well, he's tackled audits on all scopes, from straightforward inquiries to comprehensive IRS national research projects, ensuring his clients and compliance and advocating for their rights under the law. Beyond this tax practice, Bill has contributed to public service as a state representative in the Kentucky House of Representatives for 10 years, wow, and has a background in engineering for a defense contractor. His diverse experiences, both in and out of the tax world, has provided him a unique perspective of the challenges and opportunities facing taxpayers in the industry today. Well, let's dive into the conversation with Bill to explore his insights and stories from a career dedicated to navigating the complexities of tax law and representation. So, hi, Bill.
Hello, Maria.
Well, before we begin, can I ask you to say something to our viewers and especially the seniors watching Maria Cares?
I'd like to say good morning and thank you for inviting me to be on your show.
It's a pleasure, Bill.
Seniors have a unique situation. We were talking before the show, and one of the biggest things that we talked about was the standard answer that every tax preparer gives to every question. It depends. There are no two tax returns that are absolutely the same unless you have two people that were born on the same day, went into the military on the same day, left the military on the same day. There are no two people that are exactly the same. And that's a good thing. But when it comes to your taxes, you have to be very well prepared for having your taxes prepared correctly. There is commercial software out there that's really good if you meet what the commercial software is designed for. But commercial software is kind of like baking a cake out of a box.
Oh, got it.
You add a cup of oil, 2 eggs, you mix it for 5 minutes, you throw it in the oven for 350, and you get the same cake out every time. But sometimes you want to spice things up, you want to add nuts, you want to add chocolate chips, and all of a sudden, it doesn't cook for the same amount of time. And that's kind of how taxes are.
The same spice in your life, huh?
Taxes are the spice of your life because it's going to change based on everything you do. And for seniors, you can make a minor whoops and it can make a small portion of your Social Security taxable or all of your 85% of your Social Security taxable.
Ouch.
And nobody wants that shock. So this is part of why we're here today.
Of course, that's why I invited you. It's the main concern of seniors. And me being a Medicare agent, all the questions were also thrown to me. So I said, okay, this is about the right time. So, Bill, can you explain whether seniors should opt for standard deduction or itemized deductions, and what factors they should consider?
So in 2017, they changed the tax laws and they raised the standard deduction trying to get people out of itemizing. And what they accomplished by doing that was they knocked probably 70% of the people who itemize their deductions out. And the things that people were itemizing were state and local taxes, which we really don't have here in Nevada.
Oh, yeah.
Medical expenses, home mortgage interest, and charitable contributions. Well, if we take out the state and local taxes for Nevada, then we're down to medical deductions, we're down to home mortgage interest, and pretty much charitable contributions. So it depends a lot on what the standard deduction is. For 2023, I believe for a couple under the age of 65, the threshold is about $27,000. For a couple over the age of 65, it's $29,000 and change. So to get to that standard deduction threshold where you're actually better off itemizing requires either a ton of medical expenses, a lot of home mortgage interest, or you have to be a very charitable individual or charitable household to get there to be able to itemize.
I see. So, retirement account withdrawals. So, what are the tax implications for seniors when withdrawing from their retirement, say like their 401ks and IRAs?
Okay, so when you're taking money out of your 401k, you have two choices. Well, it depends on how old you are, because we do have a problem with required minimum distributions, which once you reach a certain age, and the problem with that is a moving target. Right now, 2 years ago, the age was 70 and a half, then they raised it to 72. It's going to raise to 74. So it depends on what year were you born in as to where you sit on that. And then the other thing you have to look at is if I take money out of when I take money out of my IRA, because most people can't afford to live on Social Security, am I going to take out too much money to make part or 85% of my Social Security taxable? So that's also a moving target, and that's one of them that falls into the it depends category, because depending on what your other income is, you might have to pay tax on your Social Security, you might not have to pay tax on your Social Security.
I see. But when they roll over into an annuity with the death benefit, then when it's a death benefit is not taxable.
The death benefit isn't, but if they take money out of the annuity,
Still, huh? Because it's a big chunk of money.
it can be a big chunk of money, yes.
Yeah.
So that's always a challenge. So you have to know how much is coming out of your annuity to know how much of your and then you have to know how much of your annuity is going to be taxable, because some annuities, depending on what you roll into the annuity, are after-tax dollars and some are pre-tax dollars.
Oh, yeah, got it. So, I mean, this is a concern of a lot of seniors about their medical expense deductions. So, with health being a major concern for many seniors, what medical expenses are deductibles and how can seniors maximize these deductions?
It takes some planning to maximize the deduction. Anything that you need that is medically necessary, things like going to the doctor, prescriptions, glasses, dental, all of that stuff is medically necessary. If you need hearing aids, they're medically necessary. So that's all deductible. If you need cataract surgery and you have a copay on that, your copay on your cataract surgery is a medical expense. Your eyeglasses are a medical expense. And as we get older, we all need our glasses.
Yeah, true.
So I don't care how big your computer screen is, I still can't see I can read a computer screen across the room, I can't read it up close.
Oh.
So, it just depends.
Oh, actually, so because the thing is with the Medicare Advantage, the glasses and hearings, they're covered. So they cannot deduct
If it's
that.
covered, you can't deduct it. And that's
Yeah.
another thing is it has to be a out-of-pocket expense. If
It
it's
has to
something
be.
that your insurance
Yeah,
covers,
it's already a benefit.
it's
yeah.
already a benefit, so you don't get to deduct that.
Yeah, unless they made extra, like for example, because generally speaking, they offer $300, but if you pay more, then you have to pay. I mean, you can deduct that
Right,
amount
you can
from
deduct
tax.
anything over the cost of the benefit.
Yes, got it.
And there are some people that have 2 or 3 pair of glasses. So the benefit generally covers the first pair of glasses, but if you want a second pair of glasses or something as crazy sounding as prescription sunglasses, those are medically necessary because you need your glasses to see. If you want to get around, if you need to go to the doctor, you need sunglasses, especially in this city.
Yes. Also, that's tax deductible.
Right. Well,
Okay.
if you qualify to itemize.
Oh, yeah, because if we are not, then you cannot itemize.
If you don't get over that big hump that they've set up, that if for a married couple, that $29,000, then those out-of-pocket expenses are truly out of your pocket.
Oh, got it. So, I mean, charitable institutions, well, Americans are charitable. So how can charitable contributions impact a senior's tax situation?
Okay, so there are 2 ways that charitable contributions can deduct your tax situation. The first way is if you can itemize, you get to deduct the cost of or not the cost, but the amount of gifts you give to a charity. So if you're a big supporter of a religious institution, a college, a hospital somewhere, I have a couple of friends that are big supporters of dog rescue groups.
Oh.
And a lot of the dog rescue groups are 501c3 tax-exempt organizations. So that's a qualified place where you can donate money and the IRS will allow you to deduct it. Now, if you're taking a required minimum distribution from your IRA, you can ask your stockbroker, be it Charles Schwab, Wells Fargo, Morgan Stanley, any of the stockbrokers, they can actually make a contribution from your required minimum distribution, and that comes off your income. So you might take a distribution out of your IRA of $25,000, but you give $5,000 of it to charity. Well, you don't pay tax on that $5,000 you gave to charity. So even if you can't itemize, you might save the money on your charitable contribution. So that's kind of a tax break that's been in there for a while that people really have started taking advantage of because they raised the threshold for the standard contribution or standard deduction.
I got it. Oh, this is also a very important question worrying about selling a home. So many seniors downsize or sell their homes. What are the tax implications of selling a primary residence?
There are a lot of tax implications when you sell your primary residence. Right now, the law says that a single person can make $250,000 in gain on the sale of their house, and you start with the purchase price, and you look at all the improvements you've put into your house, and then you add in all your realtor's fees and anything like that that you have for closing costs that you have to pay when you sell it. And if you make less than $250,000, you don't have to report it if you're single. If you're married, you can make $500,000, that's $500,000, and not have to report it. Where we have problems in this area is we have a lot of people coming from other states that have ridiculously high housing costs, and they exceed that $250,000 or $500,000, and they have to pay tax on anything over that amount. And where we're seeing that create a problem is the Medicare amount that you have to pay. If you made a lot on the sale of your home, Medicare may come back and bite you because, oh, you make too much money. We want another couple hundred extra dollars a month for your Medicare premiums.
Yes, that's true. Because that's a question to me. It's just like, she called me up and said, what happened? Why my Medicare contribution went up? I said, did you sold the home? Oh, yeah, I did. Why? I said, oh, I mean, that would affect because there's something what we call IRMA, income-related monthly adjustment amount, wherein on top of the regular 174, you have to pay on top of that the income because it's 97,000, something like that. And then on top of the 97,000, then they calculate another amount, and that would linger for, just like I mentioned, 2 years.
And that gets expensive. I've seen
does.
some people that are paying.
$500.
I had one person that paid almost $8,000 in Medicare this year.
8,000?
Yes. He's in the top bracket.
Wow. Ouch. But what can we do? We have to just follow the system.
It's a good, okay, it's not the worst situation you can be in. If you're making over $200,000 a year as a retiree, you're doing pretty good.
Yeah, I know, that's why.
Yes.
So you heard it. So you're still in a good position rather than those who are like falling in line to the
Be glad you have the
Medicaid.
income to pay
Yeah,
it.
yeah. Makes sense. So how about the tax credits for seniors? Are there specific tax credits available for seniors, and how are they? How can they claim it?
Okay, the tax credit for seniors are kind of a challenge. There aren't a whole lot of credits. Credits reduce your income tax. Now, there are a couple of special deductions that seniors get. They get a higher standard deduction than a single person or a married couple. So that's one break that they get. It's not a lot, but it's a break that they get. There's also a small break for being blind. And when I say small, I think it's about $700 that you don't pay income tax on, so that's not a whole lot. And then if you do happen to work a W-2 job and maybe the only other income you have is your Social Security and you don't make a whole lot, there is a credit out there that we see probably once every year or two that's for the elderly who are still working.
Oh, yeah.
And it's not a huge credit, but it is a small, it's something. So anything you can do to reduce your tax liability legally is a good thing.
True. So how about the required minimum contribution or RMDs?
Required minimum distributions.
So how do RMDs from retirement accounts affect seniors' tax liabilities?
Years ago when they set up the IRAs, the government didn't want you transferring your IRAs out. They wanted you to take they didn't want it to be a savings account that just sat there and accumulated money forever. And then you died and you passed it to your heirs. What they wanted you to do is they wanted you to take out some percentage, and in theory, you will bleed out your IRA about the time you reach 100 years old. It's not a huge deduction or a huge hit to income when you first start taking it, but the older you get, the more they force you to take out. Now, your one big dodge on your required minimum distribution is you can make charitable contributions out of that money, and you don't pay tax on that, and you do still meet the required minimum distribution rules. But the more your required minimum distribution is, the more money you're going to pay on your Social Security, the more tax you're going to pay on your Social Security. Up to a certain threshold, and then you're going to pay tax on 85% of it. And I think that was put in back in the late 1980s, and that has never been indexed for inflation. So $40,000 in 1980 was a whole lot of money, or the 1980s was a whole lot of money. And now that would probably be more like $160,000, $180,000.
I see. So, but I haven't been, I asked you about this earlier, wherein what amount do they have to make, and why, I mean, to say that they have to file a tax return?
Okay, the first threshold that you have to make to file a tax return is you have to make more than the standard deduction. If for some reason your taxable income is below the standard deduction, in theory you don't have to file a tax return. But you might want to file a tax return just to show you don't owe any tax. I know it sounds kind of counterintuitive, why would I do this? And the reason is to show the government that, yes, I had this income, but no, not all of it is taxable, so I don't want you sending me a nasty letter in a year saying, hey, you didn't report all your income, or you didn't file a tax return when you should have, and then you go back and show them that I don't owe any tax. So the first threshold is the standard deduction. If you have earnings outside of your Social Security, or you have dividends, or you have retirement income, or you have interest on a bank account or something, if that adds up to a certain amount, and I believe the amount's in the ballpark of about $16,000 right now for a single person, then part of your Social Security might become taxable. Well, you're over the minimum threshold for filing anyhow. So at that point in time, you have to file. Now, all of your Social Security might not be taxable. You might only pay tax on a very, very small percentage of your Social Security. But if there's any way they can get it, they're going to take the tax that is owed.
So you mentioned about single 16,000. How about if they're a couple?
That's kind of a moving target because they don't just go in and say, if it's single, it's 16, if it's married, it's twice that, it's 32. It's actually about 25,900 where that starts moving in. So you can have other sources of income and still be below the threshold if you're married.
So, I mean, do you mean that that's a pure Social Security benefit or other income added to the 25,000?
Well, that's the other income on top of your Social Security benefit.
Okay.
If you don't have, if the other income doesn't make your Social Security benefits taxable, then you just don't, you report the Social Security. Whatever you do, don't forget to tell the IRS you got the Social Security. If you're using computer software, the software is going to flag you, or should flag you, that says, you're old enough that you should be receiving Social Security, did you enter it? Because there are some people, and Nevada is one of the states where the state employees don't pay into Social Security. So they have an entirely different pension system and they don't get Social Security, but maybe their spouse gets Social Security. Or maybe because they worked a Social Security job before they went to work for the state, they're going to get a little bit of Social Security and a little bit of pension.
Oh, yeah.
So you have, this is a big time moving target.
I see. So how about tax planning for seniors with dependents? What advice do you have for seniors who are still supporting dependents?
That's one where you actually have, you can't do that with a computer. You actually have to have a warm body to sit down, and you have to take 2 or 3 years worth of tax returns. And the age of the dependent matters, and because you might have a dependent that's a grandchild that you now have responsibility for your grandchild because the parents did something stupid. Maybe unfortunately the parents are no longer living. You might have your own child who is in their 40s or 50s that has a developmental disability that can't take care of themselves. They need somebody there. And legitimately, they are a dependent of mom and dad, whoever, because they can't take care of themselves, and they might get their own Social Security check, and they might have to file their own tax return. But this is one of those things where you actually have to sit down outside of tax season and come up with a real plan as to how you're going to handle it. Because occasionally, these situations don't come about at the best times. You might get a phone call at 9 o'clock on a Saturday night saying, you need to come get your grandchild. Your son, daughter, or whoever was just in a car wreck, and you're the next of kin. And that's a horrible phone call to get.
It is, yeah.
So you have to do what you have to do, and all of a sudden you have a new dependent in your household, that there's nothing more shocking to somebody who is in their 50s or 60s to say, hey, guess what? You now have a 2-year-old. And what do? Well, you become a parent again. And then you have to sit back and you have to go through all of that stuff and figure out what you have to do and how you're going to parent when you think you're supposed to be a retiree.
Yeah.
So
That's sad. But anyway, that's life.
I'll say the tax system doesn't take life into account. There's nothing fair about our tax system.
Oh,
Everybody says that it's a fair tax system, that it's progressive, that the wealthy pay more than the poor pay, and for the most part that is true. But there are times when things happen in life that the tax code just doesn't foresee. They don't foresee a 12-year-old getting cancer.
True.
They don't, it doesn't foresee a lot of stuff that just happens on a day-to-day basis.
Yeah. So how about the impact of working past retirement age? How does continued employment after retirement age affect a senior's tax situation?
Okay, so that's a great big wide one.
Yeah, there's a lot of them here in.
A lot of us a lot of
Las
people
Vegas.
have to work
Yeah.
after
True.
a certain age. Well, you have to sign up for Medicare
Yes.
at 65. Doesn't matter if you're planning on work.
Yeah.
So for people that were
it's
born,
mandated, yeah.
so for people that were born after 1960, your full retirement age isn't till 67, but Medicare starts at 65.
65, yeah.
So you have to go sign up for Medicare. Now, what
Mm-hmm.
you tell them when you sign up for Medicare is, I work for this company and they provide me health insurance.
Still.
So I don't want to actively participate in Medicare now, but I want to not get penalized, because if you don't sign up for Medicare by your around your 65th birthday, they're going to penalize you every year you don't sign up for it, to a point
Sure.
that it's almost cost prohibitive.
It's true.
So
it's true.
you have to sign up for it at 65. But
Yeah.
you might keep working. Now, if your spouse quits before 65, they have to go on and sign up for Medicare. But if you want to keep working, you actually have to take the time off, go to the Medicare, go to Social Security and Medicare, sign up, let them know that you're going to continue working. I believe you have to let them know 3 months before you
Yes.
quit working that you are going to start taking Medicare on your 67th birthday, your 68th birthday, December 31st of the year after you turn 69.
Yeah.
You have to do it on certain dates, and you have to figure out when you're going to do it, and you have to let the Medicare and Social Security office know.
Yeah, that's correct. Yeah, you have 3 months before your date of birth, and then on the month of your birthday, and then 3 months after. The thing is, so in order for you to not penalize, you could just get the Part A, which is it's premium free.
Right.
Yeah, and then the B, since you could just show them that you still have employment coverage, and then you don't have to pay the Part B until you retire. So you can get your Part B then, because since at that time you will no longer have employee benefits, that's the time you can get your Part B, and that's the time you're going to have premium. Of course, expect an IRMA since you just got out of work and then your income is higher.
Okay, so this is one where you almost have to know what your timing is going to be. Because if you know what your timing is going to be, you might not want to start your Medicare until January or February of a certain year, so you don't have the high income in that year.
Still, it lingers for 2 years.
Yeah. So,
Yeah, so but then starting January, those people who were not able to enroll when they turned 65, we call it GEP, General Enrollment Period. That's the time they can enroll. But of course, they have to show proof that they have insurance.
up to that point.
Yeah, after that point, yes. Anyways, there's a form that they're going to fill up. If they can do it by mail, they can call or they can walk in. But there's a certain form, the CMS 40B for the personal information and CMS L564 for the employment information. They have to submit that in order for them to be able to say that, oh yeah, I have insurance. Not just him saying, oh, I was employed. No, there has to be a paperwork, a form that needs to be submitted to the Social Security before they honor that, oh, okay, it's true that you have insurance from work, previous work. So here, by the way, of course, when they retire, most of them, they have investment income and taxes. So how should seniors manage their investment income to minimize tax liabilities?
That one is a moving target. You need to make sure that your investment income doesn't make more of your Social Security taxable than necessary. You have to make sure that your investment income doesn't blow up your Medicare premiums, because your Medicare premium can get very expensive very fast if you have too much investment income. Once again, it's a great problem to have if you have $100,000 or $200,000 worth of investment income. You've obviously been successful in your life. There are people that don't like it when you look at them and smile and say, pay the tax.
So Bill, kindly give them example what investment income are,
So investment income might be capital gains distributions from a mutual fund. If you work for a major corporation, a Microsoft, a IBM, a Ford, General Motors, somebody like that, and you have all kinds of company stock that you've had since you started working for them 40 years ago, and you decide it's time to sell all that stock, well, you're going to have a huge capital gain on some of this stuff, and you're going to pay tax on that. Maybe you want to sit on your Nevada Energy stock and let it pay the dividends. Well, depending on how much you make in dividends, your dividends might be in the zero tax bracket, but they might screw up your Medicare amount. That's also a number that gets taken into calculation when you do how much of your Social Security is taxable. So you need to sit down with a financial advisor and a tax advisor, and realistically they should be two different people, because the financial advisor is looking at it from making you as much money as they can, and the tax advisor is looking at it from a different perspective. They want to mitigate your tax obligation. And realistically, you should have the two of them sitting there bumping heads with each other, because one of them's trying to make you money and the other one's trying to save you from paying taxes. And you're sitting there in the middle, and it's, what is your ultimate goal? Because your ultimate goal might be to make the extra money and be willing to pay the taxes. Because right now we don't pay 100% tax on anything. So if the government's only going to get 20%, 25%, whatever, maybe you're better off keeping your 75% and giving the government their 25% and letting life go on with it. Maybe you're going to do a whole lot better by taking the higher income and maintaining a decent standard of living.
Okay, yeah. So avoiding common tax mistakes. What are some common tax mistakes that seniors make, and how, in your observation, and how can they be avoided?
Okay, the biggest mistake that we're seeing is that people are getting in a rush to file their taxes. Everybody says, get your taxes filed early so you can get your refund. If you have to write them a check, you can electronically file. Today is February the 5th or 6th or something, and you don't have to pay them until the 15th of April. Well, wait a couple of weeks to file your taxes. Make sure you've got all your documents, because if you do have investments, the stock brokerage companies have till the 15th of February to get the first statement out. They have until the 15th of March to issue corrected statements. So if you've gotten a corrected statement from your stockbroker for the last 4 years, you can feel fairly safe that you're going to get another one this year and next year and the year after it, because that's the way your investments come in. And if that happens, then you have to amend a tax return. They give you to the 15th of April to file your taxes. There are times when you don't want to get in a rush. Maybe you're going to have something that changes for the better. Right now, unfortunately, we have a pending tax law change in Washington, D.C. We don't really know 100% of what's in there, because the people in Washington have a tendency to sneak something in there to sweeten up the deal for somebody to get them to vote for whatever piece of tax legislation is coming. So we actually have to sit back and wait and see what they do. Our big concern right now is they may extend the April 15th deadline, because if they change the tax laws on the 15th of February, it could retroactive to January 1st of 2023, it could definitely make a difference in when the IRS can process. The IRS may have to stop everything and change their computer software to make the changes go into effect.
Wow.
And have
Why
we
in the middle of that?
Okay, so we haven't done this since 2021, I believe, is when
I
they
see,
did this
that's
last.
why.
So this is not something new, and it's basically a pain for everybody involved. And if you do go on and file early, you got to count on the IRS to make good on their promise that they'll make the corrections and send you the difference. And for the last, when they did the last one with the unemployment insurance during COVID, they actually did make the corrections, but it took people 8 or 9 months to get their money. If people had waited until after the 10th of March to file when they said this is our new filing date, they would have gotten it right on the first try, and they would have gotten the correct refund, and then they wouldn't have had to wait all that time for the IRS.
True.
So,
Still, it's a win-win.
right.
So, Bill, is there anything you felt we missed that's important to the viewers, especially the seniors?
I know that there are a lot of people that don't want to go out and pay a professional. They'd rather buy something, they'd rather buy a box software and do it that way. Sometimes it's worth it to pay a professional to do it because the professional knows the questions, and the software is basically question driven. If you give an answer that's wrong to the software, it's going to take you down a rabbit hole that maybe you don't belong in. A warm body should know the rules well enough to know that what you told me 5 minutes ago is not what's matching up with the forms you've given me, with what you're telling me now. Maybe we need to go back and revisit that question. Maybe we need to look a little bit deeper, because there are times that answering just a simple yes/no question wrong because you don't really know, because so much of this stuff the average person doesn't have time to research, or doesn't have the desire to research, maybe would be a better way to put it, will make your life difficult and might cost you thousands of dollars.
Sure. So how can they reach you, I mean, if for their taxes every year, or consultation if they have tax issues?
Well, my office is in Summerlin. I have a strange phone number because I came here from Kentucky, and I've had this phone number for 25 or so years. My phone number is 859-621-0455. 859-621-0455.
And your company name is?
Summerlin Tax Service.
Summerlin Tax Service, folks.
Google works really well on that. They can find me.
Okay, yes. Just the same way I found you.
The same way you found me, yes.
Yeah. So, Bill, we would like to thank you again.
Well, thank you.
And we appreciate you coming, and it's an enlightening conversation about the tax.
Thank you.
It's a pleasure, Bill. Okay.
Welcome to Bonds Assurance, your trusted insurance partner. Comprehensive healthcare options for health insurance and Medicare supplement plans. Coverage for medical expenses with hospital indemnity insurance and cancer policy. Preparing for the future with annuities and long-term care. Protection for your loved ones with life insurance and final expense. We are licensed in all 50 states. Call 469-867-4390.
Understanding these enrollment periods can significantly impact your healthcare options and costs. So we're here to ensure that you have all the information you need to make the best choices. Well, stay with us as we navigate the complexities of Medicare together, ensuring you are well informed and prepared for these critical enrollment phases. Well, let's get started. The Medicare Advantage open enrollment period occurs annually from January 1st to March 31st, is specifically for individuals who are already enrolled in a Medicare Advantage plan. Take note. It offers a window of opportunity for to these beneficiaries or a Medicare member to make certain changes to their Medicare Advantage coverage. Let's discuss the details and options available in this period. Well, switching Medicare Advantage plans, while beneficiaries enrolled in Medicare Advantage plan can switch to a different Medicare Advantage plan during this period. They say, for example, Gloria is enrolled in a Medicare Advantage HMO plan but finds that her preferred doctors are not in the network. During the Medicare Advantage open enrollment period, she switches to a different Medicare Advantage PPO plan that indicates her doctors it's in the network. So next is going to be switching from Medicare Advantage to original Medicare. If a beneficiary, you as a beneficiary decides that the Medicare Advantage plan is not the right fit, well, you can choose to switch back to original Medicare Parts A and B. Well, an example would be a beneficiary finding the network restrictions of a Medicare Advantage plan too limiting and preferring the broader provider choice available under original Medicare. Well, for example, John is enrolled in a Medicare Advantage plan but is dissatisfied with some of the plan's restrictions and the network of providers. Well, during this period, he decides to switch back to original Medicare Parts A and B. Upon making this switch, he also enrolls in take note, enroll in the Medicare Advantage Part D plan to ensure he has a prescription drug coverage. Well, third is adding Medicare Part D plan. Well, if a beneficiary switches from a Medicare Advantage plan to original Medicare during this period, January 1st to March 31st, they also have the option to enroll in a Medicare Part D plan for prescription drug coverage. This is important because original Medicare does not typically include prescription drug coverage. So yes, say for example, Emma, who has switched from her Medicare Advantage plan back to original Medicare, realizes that original Medicare does not cover prescription drugs. Well, to maintain her prescription coverage, she enrolls in a Medicare Part D plan during the same period. Okay? So one-time change restriction, this you can only switch one time, okay? Unless there's a SEP, special enrollment period. So it's crucial to note that during the Medicare Advantage open enrollment period, beneficiaries can only make a one-time change. This means that you need to carefully consider your options before making a decision. For example, if you switch from one Medicare Advantage plan to another in February, you cannot make another switch until the next enrollment period. Well, unless there's a special enrollment period that is available to you. Well, say for example, Robert enrolls in a new Medicare Advantage plan on January the 15th during the open enrollment period. He later finds another plan he prefers more, but since he can only make a one-time change during the period, he must wait until the next enrollment opportunity to change plans again, unless he is covered by another special enrollment period, like a move or a change of status. Well, anyways, a Medicare agent would know that. So this enrollment period does not allow for changes to standalone Medicare Part D prescription drug plans for those who already have the original Medicare. And those changes can only be made during the annual enrollment period from October 15 to December 7. Well, welcome to our special Valentine's Day feature dedicated to all the seniors out there looking to celebrate their day of love in memorable and meaningful ways. Whether you're single, in a relationship, or anything in between, Valentine's Day is a wonderful opportunity to spread love, joy, and we are here to show you how. In this video, we'll explore a variety of heartwarming and enjoyable activities tailored for seniors. So, happy Valentine! Please watch this video.
Ever wondered how to make Valentine's Day a day to remember no matter what your age? Today we're diving into an array of practical suggestions for seniors to celebrate this day of love in style. Firstly, why not consider a day trip? Exploring new places or revisiting favorite spots can be a wonderful way to spend the day. Whether it's a quiet nature park, a local museum, or a bustling city center, the adventure can make the day truly special. Next on the list is to indulge in a fancy dinner. This could be at a favorite restaurant or at home with a gourmet meal. Remember, it's not about the price tag, but about the experience and the company. For those who prefer a quieter day, a movie marathon could be just the ticket. Classic love stories, comedies, or thrillers, the choice is yours. Accompanied by a bowl of popcorn or a favorite snack, this can transform an ordinary day into a cozy celebration. Crafting is another great way to make the day memorable. Creating homemade Valentine's Day cards or decorations can be both fun and therapeutic. Plus, they make for wonderful keepsakes. Engaging in a shared hobby can also make for a great Valentine's Day, be it gardening, painting, or bird watching. Spending time together doing something you both love can strengthen bonds and create lasting memories. Don't forget the power of a heartfelt letter. In an age where digital communication is king, a handwritten note can hold so much meaning. Pouring out your feelings on paper can be an incredibly romantic gesture. Finally, consider a surprise gift exchange. It doesn't have to be extravagant. Small, thoughtful presents can go a long way in showing how much you care. To summarize, Valentine's Day for seniors can be a memorable experience with these practical tips. A day trip, a fancy dinner, a movie marathon, crafting, engaging in a shared hobby, writing a heartfelt letter, or a surprise gift exchange can all contribute to a day filled with love and joy. Remember, it's not about grand gestures, but about celebrating love in your own unique way. So, no matter your age, Valentine's Day can be a day to remember. It's all about making memories, sharing love, and enjoying the company of those you hold dear. So, go ahead and plan a Valentine's Day that suits your style and enjoy the day to the fullest. After all, love knows no age.
As we end today's episode of Maria Cares, we want to extend our deepest gratitude to William P. Farmer, Jr., enrolled agent, for joining us and sharing his extensive knowledge on tax-related topics. His insights have undoubtedly shed light on the complex tax issues, providing our viewers with invaluable advice and guidance. Well, before we part ways, I would like to reiterate the importance of Medicare Advantage open enrollment period that runs from January 1st to March 31st. This period is a vital opportunity for Medicare beneficiaries to reassess their healthcare needs and make necessary changes to their plans. Whether it's switching from a Medicare Advantage plan to another, or revert or go back to original Medicare, and this window period ensures that beneficiaries, you can choose the coverage that best suits your needs when it comes to health requirements. And of course, financial situation. It's a testament to flexibility and personalized care that Medicare strives to offer to its beneficiaries, empowering them to make informed decisions about their health care. Well, of course, again, thank you to William Farmer for his remarkable contributions to today's discussion. And to our audience, viewers, we hope that today's episode has been both informative and empowering, remembering you of the resources and, of course, the opportunities available to manage your health care and tax matters effectively. Well, if you would like to share today's episode, you may do so by going to my YouTube channel, Maria Cares Senior Info Guide, or if you miss any of my episodes, please do so through Maria Cares Senior Info Guide. So from all of us in Maria Cares, thank you for tuning in. Stay informed, stay engaged, and take full advantage of the opportunities like the Medicare Advantage open enrollment period to ensure your healthcare needs are met with care and attention they, of course, you deserve. Until next time, take care and keep looking out for another, of course. And lastly, thank you to my loyal viewers for joining us to this journey of senior information and care. Your trust and support mean the world to me. Well, join me again next time as we explore some compelling subjects that matter to our community. And of course, until then, take care, stay informed, and remember, together, we can build a brighter future for our seniors. Well, I would like to send my love, hugs, and kisses to all my clients. And to those who are looking for a reliable agent, I'm looking forward to becoming a part of your Medicare journey. This is Maria Garcia of Maria Cares saying, take care of your health. That's the only thing you got. Let's join hands for better health.